We all want to be able to retire early with a ton of money to be able to live out the rest of our lives exactly on our own terms. But with investing in so many options in the stock market, some investors get overwhelmed with which stocks or ETFs is best to buy in order to reach their exact financial goals. Well, in this video, we are going to go over a simple yet effective exchange traded fund or ETF that younger investors could buy into and reach $1 million plus by retirement easily, and best of all, with minimal money on a low salary. Then later on, we're going to go over the exact math and method to get there. Now, if this sounds like something that interests you, then make sure to stick around. Right after you, please drop a like in this video and subscribe for more future content like this. Now, I get it, you might be thinking to yourself, well, this sounds kind of crazy. There's absolutely no way that someone on a low salary income could easily invest into an exchange traded fund and be left with over $1 million by time retirement comes around. But the only reason on why this is even possible is because of the power of compounding. The power of compounding is like a magic snowball that grows as it rolls downhill. Now, to simply understand on how this investment snowball is created, first it starts with money. Let's say you start with $100. You would then invest that into this ETF. And let's say this ETF pays you around 3 to 5% interest per year. Now, over time, the interest is going to add up. At the end of the year, you would be left with, let's say, $105. That extra $5 of interest that you earned from investing into the ETF. Now, if you as an investor are willing to reinvest the $5 and not take it out, you are now going to be reinvesting the 5% interest gain back into even more shares of the ETF. Now, if you do this over time, you are going to be left with the snowball effect. This process also keeps on repeating every single year. And as you earn more interest on the money that you had before, then reinvest it into more shares of the ETF, your money is only going to grow faster and faster. Think of it like a snowball rolling downhill and getting bigger and bigger as it goes. Now, this is the magic of compounding. Now, although there's so many different vehicles to get a younger investor to financial freedom by retirement and to get their portfolio to $1 million plus, in this video, we're going to be talking about using the Schwab US Dividend Equity ETF, better known as SCHD, to get the job done. Now, SCHD, in my opinion, is one of the best vehicles because it not only, as you see, offers a ton of price return as far as ETF price, or at least it has historically. To be specific, as of right now, SCHD is around $73 per share, and back 10 years ago, this ETF was around $39 per share. Not to mention, this ETF has some massive dividend growth and has a nice starting dividend yield. But before we dig any deeper into the exact performance and numbers when it comes to SCHD, let's dig a little bit deeper into the ETF together and learn exactly what it has to offer and how it works. So for those that might not be aware, SCHD, the Schwab US Dividend Equity ETF, is one of the most popular dividend growth ETFs that's ran by Charles Schwab. Now, this ETF strategy and objective is pretty straightforward. The investment seeks to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. To pursue its goal, the fund generally invests in stocks that are included in this index. Now, this is one of the largest ETFs in the entire stock market, with total net assets being around $49 billion as of last. And with the fund's inception date being in 2011, a lot of dividend growth investors, including myself, have a decent amount of money sunk into this ETF. So now digging a little bit deeper into the actual performance, the numbers of this ETF, and why I think it would be a great candidate for a younger investor to buy into and use as a vehicle to launch them into retirement, potentially even early. Now, SCHD since inception date is up 182+%, and that's not even dividends included. Now, the inception of SCHD was back in 2011, so it really hasn't even been around for all that long, but has already compounded consistent returns for investors. Now, another thing about SCHD that I absolutely love, especially for a younger investor looking to hold on to this ETF until retirement, and especially for an investor that might not have all that much money to invest. This ETF, like we mentioned a little bit earlier, does have a pretty high dividend growth rate. Now, the dividend growth rate is an annualized percentage rate of growth that a particular stock dividend undergoes compared to the previous 12-month period. So to be specific with SCHD, the trailing 12-month dividend growth rate is around 7.13%. So think of dividend growth as sort of a raise in your dividends that you're getting paid over time. And I don't know about you, but I love getting raises in any way, shape, or form when it comes to money. The dividend growth rate on the 3-year time frame is 12.33%. The 5-year time frame is around 13.9%. And the 10-year time frame around 11.32%. Now, for whatever reason, if you're still a little bit confused about dividend growth, here's a very easy visual for you to understand it. Over time, historically, this ETF has paid more and more in dividends on a quarterly basis, historically speaking. To be specific, around 10 years ago in 2014, SCHD was paying around anywhere from 25 cents a quarter to maybe 27 cents a quarter. Now, as of recently 10 years later, this same ETF is paying investors around 66 cents per quarter or even as high as 70 cents per quarter. So for investors in theory that bought SCHD around 10 years ago, they are not only up a ton as far as share price, but as far as dividends paid on a quarterly basis, they are earning almost 3 times as much from doing absolutely nothing. So if you were to extrapolate that out into the future, how much in theory could SCHD be paying 10 years from now? Finally, I promised that we were going to go over the exact math and show you how anyone, even with a relatively speaking low salary, could invest into something like SCHD long-term and have $1 million plus in their portfolio when it comes to retire. So let's say a 20-year-old or a 25-year-old was looking to do this and they wanted to retire, let's say, anywhere between 45 years old and maybe 55 years old. And again, this is off of a relatively speaking low salary, with $10,000 invested in just $5,000 per year, which should be doable for most investors. With SCHD's initial starting dividend yield of 3.5% and expected annual dividend amount increase of 8%, which again, this could always change in the future, it could go up or down, and a 3% annual share price appreciation with 30 years invested quarterly paid distribution rate, and all dividends reinvested on top of that, let's see what we get. So for this investor that's just adding again $5,000 per year and letting the dividends reinvest do their thing, by year number 1, they would have around $354 in dividends per year and a $10,000 principal. By year number 2, $15,600 in principal and $580 a year in dividend. Now skipping down by year number 5, $34,700 and some change and around $1,500 per year in dividends. By year number 10, around $78,000 worth of SCHD at this point and almost $4,300 per year in dividends. Now, by year number 15, this investor would already have almost $145,000 invested and over $10,000 per year in dividends. By year number 20, $258,000 and $23,000 more or less in dividends. Now, what's pretty substantial is from year 20 to 30, the numbers are going to get bigger and they're going to get bigger fast because that's exactly how the power of compounding works. By year number 25, this investor would have around $473,000 invested and around $53,000 per year in dividends. And by year number 30, after it's all said and done, $1,049,000 and some change and over $136,000 per year in dividends. And remember, these numbers are based off of just an initial $10,000 purchase of SCHD and of course dividends reinvested and $5,000 per year from there. So there we have it, a perfect example of exactly how investing doesn't need to be as difficult as some people try to make it. By investing into a high quality dividend growth ETF like SCHD, even with a relatively speaking low salary, any investor can potentially still become a millionaire if they of course start early enough and let the power of compounding do its thing. But I want to hear from you guys down below. If you currently are dividend growth investing, what age are you hoping to be able to retire at? Let us know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.